So I'm looking at when I'm trading. This is not that I'm trading price per se. I'm trading indicators per se. So I'm looking at support and resistance levels, looking at how price got to those levels, the way price got to those levels, how they are, and what I could expect. So the phenomenon, or the main reason why I have this stochastic on my chart is for divergent purposes, nothing more, nothing less. I'm not concerned about oversold or overbought. I'm just looking for divergence. So now, like I said, divergence, there are two types of divergence. We have the regular divergence and the hidden divergence. Now, for the regular divergence, we see price, that's the one we have here on this 835. We saw that price got to this level, this point here. Let me see if I can get move. Okay, I think I can move this. This is the lowest level. That point is support. So price got there the first time. Then look at the oscillator. When price got back to that point, the oscillator had moved to a higher point, of which, if the move was actually true, the oscillator should move to at least the same point or lower. But instead, the oscillator moved higher, indicating that, let me see if I can get that, indicates, okay, now this is it. Yeah, I think I got it. So as you can see, look at the indicator. The indicator was going higher, whereas price was basically at the same at the low. More, by the way, this is the low of last week. Well, let me not just go into that for now. But price was at the low, so we could say that, okay, price was going higher and higher and higher and higher and higher and higher. So we could expect that price was going to bounce to a reasonable extent. So that's what the regular divergence looks like. When price is going down, the oscillator is going high. That's what the regular divergence is, indicating that the downward momentum is weakening, and of which we might see an upward move subsequently. So now the other kind of divergence that is called the regular divergence. Sorry, the hidden divergence. What we just looked at is the regular divergence. What we also have another one. It's called the hidden divergence. So now what this hidden divergence is that in the course of price moving up and down the boundaries of this oscillator, there are some times which price will move higher and the oscillator will move lower. That one is irregular divergence. But there are some times when the oscillator will move higher but price will move lower. That's a hidden divergence. I'm coming. Let me see if I can get that. Wow, this is the 4-hour chart. Let me see. Let me move down to a 1 hour, a 30-minute chart. Let me see if I can get that. That happened. Let me see. So I can give you, yes. This is it. That happened somewhere around here. Now, what we're concerned with these indicators, we're looking at the peaks. At this top is called the peak. The bottom is called a valley. So we're concerned with the peaks, connecting two peaks and two valleys. So now looking at this point now, these 2 points, this point that I've just marked now here. As you can see, price on the oscillator, we saw price here, and the oscillator moved again to this point here. Now looking at price on the price charts, instead we saw the opposite. Price was going downwards like this. Wow, I'm sorry I messed that up. So price was going downwards, the oscillator was going upwards. If you can look at this is the topmost level on the oscillator. Look on the price chart, this is the topmost level, whereas on the oscillator this is it has surpassed that level, of which on the price chart it didn't surpass that level. That's an indication that this move to the upside has ended. Now, I think this is one of the reasons why some people say they sell at at 80 level, because it's oversold. But they don't understand that what they are witnessing is a hidden divergence. So we saw here price moved above the previous high on the oscillator, whereas on the price chart we were going lower, but on the oscillator it showed us we were going higher. This is a lie, indicating that the up move has ended, or it has not ended per se, but the momentum has died, so we're heading lower. So if you look at what happened on the price chart, from that point we headed down lower before we got to this bottom here, of which we had another price behavior at this bottom before the move up. So that is what the hidden divergence looks like. I'm not going to bore you with the details. There are a lot of information online that you could Google and just type it, and they will give you a whole breakdown